the activity in the region has gone from strength to strength when it comes to corporate funding in general. It's driven by the growth we're seeing, it's driven by the investment program we're seeing, and just the general plans that they've done across the region and internationally. The primary source of funding still remains the bank market, which by its nature is more private. However, in the recent years, we've seen an increased access to the debt capital markets and greater issuance in the bond market, whether it's through the conventional or through the sukuks. And that's driven by the extra comfort that corporates have had now to go out there and be in front of investors and explain the credit story, articulate the growth, and make the region as an investment hub. So the focus is still mostly on private forums through the bank market, but increasingly the DCM business has grown through the public side. The true sense of the private credit that everybody's talking about in terms of this intermediation of the financial markets, so investors going straight into corporates and issuing private credit, is still nascent. But we're seeing some spurts of interest through what we call structured credit transactions. So the region is not unfamiliar with uncertainty. We've had quite a few shocks, whether it's the oil shocks, the COVID shocks, or the extended tensions geopolitically. Having said that, the growth plans are still full steam. We've not seen any of the corporates hit the hold button, so to speak. In fact, what we're seeing right now is more opportunities that both global investors are looking into the region and our corporates in the region implementing their growth plans both domestically and internationally. Obviously, with these uncertainties that we've seen recently, there is a wait and see observation. Some sectors that are mostly logistically driven had to adjust their operation to make sure that everything is carried on in the most appropriate way. But other than that, the mood is still generally on the positive side, notwithstanding open ears and eyes on what's going on the geopolitical scene. So we're fortunate to have been number one investment bank in the region now multiple years in a row, I would say, and specifically when it comes to the equity capital markets. We're leading DCM house, which gives us a very good view on the activities that we're witnessing, both from the corporates and the institutional clients. The activity has grown significantly and will continue to grow significantly in the investment bank, both from international investments. We've seen the announcement by ADNOC's interest into Santos in Australia. This was a $20 billion deal. We've seen the increased interest by our sovereign wealth fund to maintain their international diversification, while locally the access to the equity capital markets by family offices, by small, medium-sized business, and by privatization initiative of government entities has increased significantly. We've been fortunate enough to play 8 out of the 13 largest IPOs last year. And we continue to see that capital markets trend continue. We continue to see the interest by international investors diversifying away from other emerging markets and investing in the Middle East, spurred by the outsized growth in the region, the deregulation of the markets, and thirdly, the general interest that you've seen in good stories coming out with good research following, investor following, and local domestic market following. The MENAT Asia corridor is an extremely important one for HSBC, and in fact both regions are experiencing tremendous growth in their own right, and they are both in search of capital. So with that, we expect the capital flows, trade flows between the MENAT region and Asia to grow to $2 trillion by 2035. That's from half of what it is today. More so, the trade flows between the GCC and China, for example, are expected to exceed $350 billion by 2027, from half of that 3 years ago. So with that in mind, the combined partnership between the two regions is seeing itself through the renewable sector. A lot of Chinese entities are investing in the GCC and Oman specifically to grow their solar renewable production. What we're also seeing, a lot of Asian businesses are investing in the oil and gas sector and the infrastructure sector in the Middle East region. But more importantly, the general network business, which is the multinational corporate business, is at its highest level today between the two regions. In retrospect also, or in reverse, the MENA region has been the largest investor into China when it comes to the tech space, the EV space, and the general industrial space. So with that in mind, the future is very bright for both regions, and we're going to continue to see this partnership and this growth in that corridor over the next decade. So the organization, in simple, is meant to double down on our investment in the region. We've grown our capital markets and advisory team, the investment banking team, to push our M&A products, our equity capital markets product. We've enhanced and increased our balance sheet into the region through our partnership with Asia, which means that we will be in a much stronger position as ever in order to meet the financing demands for the region. But more importantly, the reorganization is meant to simplify our processes and our interaction with our clients, and that can only be a positive thing